Thank you all for joining us this morning. My name is Catherine Daly. I'm the Park County Housing Coalition Program Manager, and I'm delighted to welcome you to the Park County Housing Coalition's first ever accessory dwelling unit financing seminar. I have a couple announcements before we begin. As I mentioned, we're recording this event. You've all heard about it. You've signed the release, hopefully. And then this information will be posted on parkcountyhousing.com after the event. Second, I'd like to thank Barb Oldershaw with the Park County Community Foundation, who is our partner. And then lastly, I'd like to thank Becky Miller of the Livingston Branch of Opportunity Bank. She came up with the idea for this event in her role as a volunteer steering committee with the coalition and has been instrumental in getting us to this point. She is absolutely a wealth of knowledge, and I'm really grateful she's willing to share that with us for the benefit of the community today. Last but not least, I'd like to acknowledge our panelists, whom you will be meeting a little bit later in today's presentation, who are also volunteering their time and expertise for the benefit of our community. So without further ado, what are we going to talk about today? So I'll start off with some goals for the event and a very brief introduction of the Park County Housing Coalition and why we're focusing on accessory dwelling units this year. Then Becky will walk us through how lending institutions define accessory dwelling units and the various financing pathways, including some new ones that exist for this housing type. And then after that, I'll talk with Becky and our other wonderful panelists working in real estate, appraisals, title, construction, and property development about some of the stickier aspects of ADU financing. Then we'll wrap up and you can grab a lunch to go. And if we have some time remaining, hopefully chit chat a little bit amongst ourselves. So today's goals are just to build a shared understanding of conventional and government financing options for ADUs, facilitate and encourage cross-sector collaboration to navigate gray areas in ADU financing policies, and promote responsible investment in a housing type that could meet some community needs. If you aren't familiar with the Park County Housing Coalition, we are a program incubated within HRDC's Community Development Department, and we're supported by a host of community partners like the Park County Community Foundation and Opportunity Bank. Our work is guided by the 2022 Park County Housing Action Plan and is implemented with our nearly 100 individual and organizational members. And this event is a great example of what that looks like, and hopefully something we will continue to build upon. Our mission is simply to increase opportunities for Park County residents to access housing where we can afford to live and thrive. So why ADUs? There are a lot of reasons, and I could probably talk about this for 20 minutes, but I'm just going to touch on a couple that are most relevant for today. Namely, that the Federal Housing Administration, the FHA, published a policy last October that created some new financing pathways for ADUs. As Becky will show us, some institutions, namely Freddie Mac, have followed suit. So we want to share what those are about and talk about how you can take advantage of them. I also want to highlight some other aspects of ADUs that speak to a question one of our attendees shared when they registered. So thanks to all of you who did that. They asked about housing affordable to lower income households and accessible to folks as they age. Well, the AARP touts the benefits of ADUs because they can incorporate universal design features and offer opportunities for multi-generational living and aging in place. Some of the institutions Becky will be talking about have financing options exclusively focused on this use, although the opportunities to take advantage of that are somewhat narrow. This is important for our community because nearly a quarter of our residents are age 65 or older, and that share is growing. Furthermore, ADUs can provide an additional income stream for lower income homeowners, and both Freddie Mac and Fannie Mae have mortgage options for this scenario. Again, although the opportunities to take advantage of that can be quite narrow. And then last but not least, ADUs have the potential to provide rental opportunities to lower income households in neighborhoods that might otherwise be unaffordable to them. Of course, this hinges on commitment on the part of the property owner who's building the ADU on their property, which is something that the coalition is working on, and we can talk more about in the panel discussion and in future events. So because of the factors I just mentioned, and the additional ones on the last slide that I didn't have a chance to touch on. The coalition has launched a pilot ADU program this year to see if this housing type is worth ongoing investment in. So the program has two parts, and the first part of this program is just the workshop today. The second part will be a multi-section workshop this fall for homeowners wishing to build an ADU that will provide opportunities for community members to age in place or afford to continue living and working in Park County. Participants will also identify key components of the package that would incentivize them to ensure their ADUs are available exclusively for long-term rentals by community owners, community members. So now that you're all caught up, I'm going to hand this over to Becky to talk a little bit about how lenders define accessory dwelling units. Come on up, Becky. Thank you.
Catherine, do you want to get Becky on the microphone?
Oh, are you having trouble hearing in the back?
Will this improve the audio for the recording? And no?
No, the owl picks up audio very, very loudly, and it would be too loud. But thank you.
Hello. All right, so let's just go a little bit into defining an accessory dwelling unit. For lending purposes, it has to be a self-contained living area, space, or unit that is always going to be subordinate to the size of the primary home. It needs to be a one dwelling primary home. So you cannot, I didn't do it.
You can just keep talking, Becky, and I'll. There we go.
It can't be a 2-unit property with an ADU. It needs to be a 1-unit property with an ADU. It also constitutes a single interest in real estate with the primary 1-unit dwelling, which that to me has been a very confusing statement. So I'll break that down in the future slides here. So the definition of a self-contained living area, space, or unit differs for every single investor. Fannie, Freddie, FHA, USDA, RD, and VA all have different lending needs. In the end, the appraisal is the one thing that will truly determine whether or not I can consider this a ADU. So if the appraiser goes out and tells me, no, this is a 2-unit property, I cannot use it as an ADU. But I can look at the property when I'm pre-qualifying somebody and say, does it have a separate entrance? Does it have a separate exit? Is there limited access to the ADU? So if it's in the basement, has the home have restricted access to the basement, where it's not just an open, free between the two spaces. It actually has like a locked door or a hallway that is specifically blocked off with a door for the use of the ADU. And then the ADU has its own separate entrance or exit from the home. Separate utility meters and separate addresses. When you get into the government type of financing, RD and VA are 100% disqualifiers. But Fannie Mae mentions it, but if the appraiser goes out and states that they consider the ADU an ADU and not a separate unit, but it has a house number on the outside of it, I can still usually get it financed because they're going to use the appraiser's information as the expert opinion of that, okay? And a lot of times if you're gonna do a long-term lease, you're gonna want them to have their own address. So we have a little bit of a gray area, which we have a lot of those. And it comes down to making sure that we're using our experts to determine whether or not we can consider the home an ADU. Separate utility meters, same thing. As a lender, we would like to see it not be separately metered, that the utilities are all together and included in that rent, right? But again, I have had homes that we've been able to finance that have separate utilities. that are separately metered. I'm just gonna use Freddie Mac to do it instead of Fannie Mae. And again, it comes down to how the appraiser determines that unit. Okay? The next one is the self-contained living area, space, or unit. They all have to have a bathroom for every single lending option. It needs to have a bathroom. Bedrooms, each one defines a different way of calling it a bedroom. So not necessarily its own space with a closet like when realtors are putting houses on the MLS. It can be just an area that is designed for sleeping. Okay? Kitchens, you know, Fannie gets pretty descriptive with what they're looking for. But again, if I get an appraisal that says this is an ADU, my underwriters with Fannie Mae, Freddie Mac, FHA, they're going to lean onto that expert saying, okay, that appraiser went out there and they determined that it is an ADU and not a 2-unit property. Okay? It always has to be smaller. We can't have an ADU that is bigger. I can't say this is the primary residence and this 2-story home next door is the ADU. We're going to call it a 1-unit home with an ADU. No. We'd have to swap it and call the smaller unit the ADU. So it's measured in different things by different investors, Freddie Mac, finished area, USDA, VA, gross living area. The city of Livingston has some zoning regulations also. No minimum size of an ADU is site built. So it has to be smaller than the main unit, the primary unit, but it does not have a restriction if it's site built. Site built meaning not manufactured, not delivered to the property. Okay? Sometimes it has to be subordinate in location and appearance. And this is for RD and VA, but I do think this is a good statement for anyone who is thinking about building an ADU or putting an ADU on the home. It's very, location and appearance is, you know, you want it to feel combined. Like this is an addition to the main home. You want it to have the appearance that it is included with the main home, okay? So I think that statement is a good statement to have for anyone who's considering purchasing an ADU, building an ADU, doing any kind of financing of an ADU. And it needs to contribute less value. So these are different ways that we can consider an ADU, right? Attached to the home, an upper level that has its own access. A basement, again, having its own access. It can have access to the main home, but it has to be shut off. It has to be a very limited access to the main home that can be secured. Detached, like in the backyard, in the alley, over the garage, or a full garage conversion into a separate living space. Constitute a single interest in real estate with a primary 1-unit dwelling. So this comes back to the main unit needs to be the primary home. And when the appraiser goes out or when somebody goes to look at the home, myself as a lender, an appraiser, city, they're looking at it and saying, this is the main home and this is the auxiliary dwelling unit. Their highest and best use is main house, separate, small ADU. Oh. Some different types of construction of ADU. If the primary dwelling is site built, so stick built, we can have a site built ADU. We can have a modular ADU. So these are homes that are not on an axle. They are prefab somewhere else, but sat on the property and attached on a foundation, attached to the ground. We do have some options for a manufactured ADU. So this is an ADU that comes on a trailer. Maybe the wheels stay, maybe the axle stays, but it has a HUD plate on it and it's assigned a VIN number. It has labels that are attached to it also. They're pre-built somewhere else and then brought to the home and attached permanently to the ground. We can have a stick-built main home and a manufactured ADU, no problem for financing. If the primary dwelling is a factory-built home, a manufactured home, then we need to have the ADU be a site-built, stick-built ADU. We only have one lending option for two factory-built manufactured home and a factory-built ADU. It's called the Freddie Home Choice. The manufactured home itself has to be certified Freddie Home Choice Home. It will have its own sticker. It's only in the last few years. Any manufactured home that has been built prior to, I believe it's like, I think it's 2015, but I can get that good information out to you, does not have the ability to be a Freddie Choice Home. That's a brand new program. I don't have that option in my lending portfolio, but some lenders might. I can tell you that most of the time you cannot have a manufactured home, especially if it's older, and a manufactured home ADU and be able to get financing. It's just, we don't have it yet. Okay, so let's go through financing goals for people. You want to buy a home and it already has an ADU on the property. So you went out, you've looked at the home. These are some of the financing options that you have. FHA just came out in October of 2023, allowing you to use rental income on the ADU, which is exciting. It has to be long-term rental income. The ADU does not have to already be rented. What we are asking for now is the appraiser to do a rent schedule on the ADU. So you're buying the home as your primary residence, and then we're going to do a rent schedule on the ADU to be able to use up to 75% of what the appraiser says is an average rental income that that property could support. It's a good way to get people to qualify for homes, especially in... I just hit the space bar. It's going to sleep, I think.
Lost connection with the.
Oh. Sorry. Choice for people who can't qualify for a home price. Maybe if it has an ADU, I can qualify them for a higher purchase price because I get to use some of the potential rental income.
Sorry.
No, you're good. So Freddie Mac is pretty much came right on board with that of FHA, so I can do a conventional and I can do an FHA loan using the additional potential rental income from an ADU. Home Possible is a type of Freddie Mac mortgage that allows you to be in a lower income bracket and get some discounts on interest rates and mortgage insurance if you're not putting the full 20% down. The Choice Home Mortgage, again, that's the manufactured home product that Freddie Mac has for financing that allows you to have a manufactured home as your primary and a manufactured home as the ADU. Home Ready is the same loan that Freddie Mac has with Home Possible. It's a lower income, 80% of the median area income, and you can use rental income from a potential ADU purchase. USDA used to not have any ability to do any kind of home that could have any kind of income potential. So we could not do anything but a single family residence. We couldn't do ranch. We couldn't do chicken coops. We couldn't do any kind of loan on a property with USDA that could have potential rental income. And the reason for that is because they wanted to give loans in rural areas to people in a certain income limit as their primary residence. And because they were discounting the interest rate, discounting the amount of down payment, they didn't want you to have the potential to make income off that property. That was the purpose of the loan. They have now changed some of their rules to allow ADUs. They don't want you to have the rental income. I cannot use rental income, but I can do a USDA rural development loan on a primary residence, single family home with an ADU. The ADU cannot be used for rental income. I cannot use qualifying potential rental income to qualify you. The idea is that you're using it as a mother-in-law apartment, 100%. Multi-generational families, that is what USDA is now saying, okay, we'll accept an ADU on the property. VA will allow you to have an ADU on the property and get a VA loan. Again, I just can't use any rental income on VA loans.
That's the problem.
Yeah, I guess our transmitter to the projector is not working very well. My apologies.
I can see it.
But yeah,
There we go.
Becky can see it and keep talking you through this. Barb, would you mind trying to go grab Matt to see if he can? Thank you.
Okay, so the next goal is that you find a home that you're interested in. It's just a single family home. It's your primary residence, but you would love to build an ADU, but you're in the process of purchasing it. And you want to roll it all together into one loan at the time of purchase. I do have a couple options for that. FHA has a 203K rehab loan. What you're going to do is you're going to go out, you're going to figure out what the cost to build an ADU, you're going to find a contractor, you're going to find setup fees. I'm going to include that into the mortgage, the purchase price of the existing home. Your down payment will be based off of the total cost. Once you close, we will start doing a construction draw process. We put the monies into an escrow account and we make draws until the home is completed with the ADU. So the home's completed already, but the ADU is now complete. We'll send the appraiser back out there. The appraiser will tell us, okay, the home is 100% completed as per the plans and specs that we got when we first closed on the purchase. And then we wrap up that loan. So it's called a FHA 203K rehab loan. Fannie Mae has something exactly like that, but on a conventional sense. It's called the home style renovation loan. I call it the HGTV loan, right? So everybody sees all those shows out there and it says, oh, you're approved for $700,000, but you purchased a property that's only $400,000. This gives you the additional $300,000 to use to build, to do construction, to do an ADU. So all of these type of financing have different little restrictions. I'm not going to go over every single one of them, but they're pretty much set up the same way. You purchase the home, you use the closing date of buying the single family residence. Same, we don't change that. We just get the cost to build the ADU and get it set up on the property. We close on the home, and then once you start paying your mortgage payments, you're doing everything on the main amount, the full amount, the total cost to build, right? The home and the ADU. In the background, we're doing draws with the contractor until the home is complete. We usually set times on that, 6 months to 12 months to get that done. Send the appraiser back out there. Everything's done, complete. FHA, conventional financing, Fannie Mae, Freddie Mac. So I just want to say something real quick on this. Why would you do one from the other? FHA is always going to have more property qualifications. They're going to have a lower interest rate. They're going to have higher mortgage insurance premiums and lower credit scores. So your lender that you use, their job is to figure out which program fits the property and fits you. the best. So that's why we're showing all the different options that are available to you. And then your lender will help you determine which one fits you the best. Okay, so now you want to add an ADU to a property that you already own, your primary residence. So a couple different things, conventional financing, Freddie Mac, Fannie Mae are conventional financing. We can do a cash out refinance. So this leverages the equity that you currently have. And what does everybody who owns a home in Park County right now have? Pretty much equity. We have equity. That's what we're building. So you can pull the equity that you have on the home as it currently is. So let's say you've decided you can build an ADU for $50,000 to $70,000. You don't want to touch your first mortgage because you took advantage of the 2-3% interest rates just a few years ago, and you don't want to touch that. That's golden, right? So well, you have to on a cash out refinance because we're gonna roll it all together. The next slide, we'll talk about how you don't have to, but choice renovation allows you to cash out refinance as is home current value. Choice renovation, choice home, they come in and do it as the ADU is completed. So I get to use the value once the ADU is on, cash out the value as is just a single family home. Okay? Same with Fannie Mae. They're exactly the same, just different names. Federal housing, FHA has a cash out and has the 203K that we talked about. The VA loan, a cash out. The VA loan is an amazing cash out refinance. You can go up to 100% of the current value of the home. We have some portfolio products that you could use. This is where you don't have to touch that 2% interest rate. You can come in, go to a financial institution and do a home equity line of credit. It's going to be a second mortgage. It's going to go in second lien position behind your 2% mortgage. You pay minimum interest most of the time. You have a payback period of 5 to 10 years. You're supposed to use it like a revolving debt. You're supposed to use it, pay it back, use it, pay it back. Home equity loans, same thing, second lien position. It's going to use the equity that you currently have in your home. They cannot take into consideration the improvements that you're going to be making. It's as is value, but this is a termed out financing that you can actually pay principal to. So it's a full-on loan, not a line of credit. I guess I'm done. So I just want to say I'm passionate about ADUs. This has been important to me. I think it's a really good way that Park County can maybe take advantage of the equity that homeowners have in their properties and start putting some additional units out for people who need housing to keep members of our community staying here and not having to move to other places in the nation because they can't afford to stay here. It's near and dear to me because, I had elderly grandparents who were looking for an ADU. An ADU would have been a perfect location for them if it wasn't in my backyard, even if it was in somebody else's backyard. To keep an eye on them, but also to have that just really small space. They weren't looking for anything big, and on fixed income, so Social Security, you don't have enough of those housing options for our elderly people. So, thank you.
Thank you so much. Before we begin, Becky's already gotten an introduction. Should we go down the line? Brooke, would you like to introduce yourself very briefly?
Yeah, I'm Brooke Weimer with Berkshire Hathaway Home Services here in Livingston. I'm a fifth generation Montanan and in real estate for 14 years now, so I'm happy to be here. Thanks for having me.
I'm Wyeth. I think I know almost everybody here though. Wyeth at Base Camp. Glad to be here.
I'm Mark Pizzo with Guardian Title. Thanks for having me.
Cody Wood, one of the owners of Woodland Ridge Tiny Homes here in Livingston. Chris Brody of Montana Valuelytics. I'm a residential real estate appraiser.
Great, awesome. Well, thank you all again for joining us. I'll start with a general question for all of our panelists, which is just sort of what is the interest that you're seeing from your clients in accessory dwelling units, or how many projects have come across your desk recently with an accessory dwelling unit? And just to sort of level set and see how prevalent this is. Brooke, do you want to start us off?
Sure. So my experience with accessory dwelling units so far has been more on a large scale level, where developers are coming in and using construction loans to complete the primary dwelling unit and the accessory dwelling unit and wrapping that into one. I have also had clients where they're utilizing their HELOCs, of course, and doing accessory dwelling units. What I have been surprised about is the lack of education so far in accessory dwelling units in general, and I feel just that it's our job as a community to really be communicating that and having dialogue and educating the public about that opportunity, because it's a golden one.
Great, thanks. Do any of our other panelists want to share a little bit about the interest that they're seeing from clients in accessory dwelling units, or work experiences that they've had with them crossing their desk?
We're getting quite a bit of it. I think we're in the middle of 6 projects now that have them in some way, form, or another. I think people have to, with our clients, it's always about kind of approaching it in a really cost-effective way. So it's usually getting attached to something that's happening that's a little bit larger, which obviously is accessory dwelling unit. We have done a couple that have been they've been for parents, basically retiring parents. And those have gone really well. But yeah, fair bit of interest. I think everybody's surprised at how expensive it still is, even though it's small. We're below the tiny house guy talking.
Yeah, and I would say we typically operate within 3 different markets. The first, one being the primary residences for our tiny homes. The next being workforce housing. So we've had quite a few businesses that have purchased from us for workforce. And then the third being more like an ADU investment standpoint, whether it be, most of what we do is long-term rentals. We do occasionally have people that use them as short-term rentals. But we have seen an uptick. I'd say that's about 1/3 of our business is ADUs at this point. We've done multiple ADUs literally all around the state at this point.
Can you describe what a tiny home is?
So the technical definition of a tiny home is anything under 400 square feet. So like 399 square feet and less, and that's footprint. By the time you add in lofts, we have done some that have total usable space of close to 600 square feet.
Whose definition is that?
That is based off of the IRC Appendix Q.
Who?
IRC, the building code. It's international building code.
So I'm curious, it seems like the definition of accessory dwelling units seems like a pretty integral component to accessing financing, communicating clearly with clients about what they're building, what they're selling. I would be curious to hear from some of you, does your understanding of ADUs and how you have been defining them professionally align with how Becky shared lenders are defining ADUs? And does do you think that your definition or how you communicate about that will shift as a result of understanding sort of what lenders are thinking about when they're trying to finance an ADU? Does anybody want to tackle that one? I might call him Chris.
That's the definition I use. So when we're appraising on behalf of a lender, which is most of what we do, we're going to look at what the lender specific definition is of ADU and work with that. So sort of my job is to answer that as well as I can with photographs and narrative explanation. It sounds complicated. It's not. I don't actually remember an argument about, oh, this is a duplex, not an ADU. It's usually really clear that it's a duplex. And then every now and then somebody wants to argue because they want to fit into a particular loan parameter. But, I guess I was thinking when you were talking that part of what we do is, as an appraiser, we're satisfying underwriter questions sort of in advance. So we're going to be scrutinized. It's a heavily regulated part of our job. And a lot of what they do now that they didn't do 10 years ago is they want pictures of everything. So if I see 2 addresses, I'm taking a picture of the 2 addresses. If I see 2 utility meters, I'm taking that picture. If I see 2 kitchens, I take that. And then the way I define it is, I think of it more like a scale. And I just go, okay, well, they're the same size. Duplex, that's a pretty heavy weight, right? But if, say they're different size, but they're addressed differently and they've got different utility meters, but if it sits and flows and say it was sold and last time it sold, it was marketed as an ADU, all that sort of stuff, it might violate a couple other things. I'll check ADU, that's the way the market's going to see it, and ultimately that's what the lender's after, is how does the market view it. And that's kind of our job.
Great, thanks. Does anybody else have a different perspective, or they're finding that their conversations with clients about what an ADU differs from what the lenders are requiring?
There's definitely a conflict in the Montana State Code, the city law, zoning regulations, and local lenders. They're not aligned. So you're kind of, you need to thread that needle. And the best example is he talked about separate meters, and she's like, I can't find separate meters when the city requires separate meters. So like, unless it's structurally attached. And so I think typically the conversation starts with like, I basically where the garage is, I'd like to put a house there. Oh, by the way, I'll just run water to it. It's not going to work that way. And that's usually the really difficult part of the conversation, because you're still paying a lot of impact fees, utility connection fees for that. So there's some conflict still occurring.
Well, I would echo Wyeth with what the lender, the definitions from lenders, it's sometimes different than what the municipality definitions would be, or the municipality interpretation of. So like we work not just here in Park County, we work all over the state, and the definition, because I'm working on a project right now in Red Lodge to do a dual ADU, we're putting 2 ADU. It's the way it's owned in Red Lodge. We're working on that project. Well, the definition of
The way the inspectors and things talk about it in Red Lodge is very different than how they talk about it here in Livingston, which is different than the way Becky talks about it. So while there are certain pieces of it that are very simple, once you talk about the municipalities, it can get a little hairy pretty quickly at times.
Mark, do you have different thoughts on that, or different experiences?
No, this is not a surprise to me. It's new information, actually. You'd think we'd all be on the exact same page.
Well, in terms of some metrics, yes, like in terms of, like the emphasis on the accessory dwelling unit being smaller than the primary dwelling unit, subordinate in size, for example. We do know that like a separate water meter is required if the structure is detached within the city of Livingston, but that's not required if you're building within the footprint of the existing building or as an addition. So in some ways there's an alignment, and in some ways there might be some critical differences.
Brooke, I want to add to that, and that's why it's crucial for us, especially in the professional field, to really be educated, like especially as realtors being the hub of it all, right? And trying to educate our buyers with cooperating with the planning department, with our lenders, with our appraisers. It's really important that we are having that dialogue and we are educated. I don't know the ins and outs of the municipal code as far as reading line by line, but I have a good foundation in education on that to be able to educate forward with that. And that is really crucial right now, especially with these properties, so that we can help streamline that process and catch it in advance instead of trying to clean it up afterwards.
And I just also want to say that just because it's metered separately, it's not 100%
Right.
that I won't be able to finance it. I will, again, I work hand in hand with the appraisers, and the appraisers taking in the whole picture of the property, and, really comes down to highest and best use. What is the highest and best use of this smaller unit on this property? Is it as a separate unit on its own, which is a 2-unit duplex property, or is it an auxiliary unit to the main residence? So there was a time where if a property, an ADU was separately metered, like I just did not have a lending option for it, but that is definitely evolving, along with the fact that now I can start using some rental income.
No, that's,
so.
the rental income thing is great.
Yeah.
And hopefully, once we work through the trial and error of this, some of these things will align as well, right?
Well, and that's part of the challenge too, because this is so new that a lot of times when we talk to somebody at
the city level, it's the first time they've ever walked through this. So we're really walking this together. And what I found, because working in different areas, everybody's been really great to work with. There's just a lot of head scratching of how do we figure out how to make this work. Very few people I've run into at the municipal level have been like, no way, we're not doing this. It's like, okay, we don't really know how to do this because we've never done it before. And then we've been able to glean stuff that we've done here in Livingston that's helped with us in Helena, that's helped with us in Red Lodge, that's helped in Columbia Falls. So it's really, I feel like we're kind of on the cutting edge of really building this in the state of Montana together.
Great. Yeah, that's what this is all about. I have two questions. The first is about what I think is an interesting piece of the definition, and then the second, I want to focus on some lending options. So the first question is just, do any of you have any experience with an accessory dwelling unit and a primary dwelling unit that do not constitute a single interest in real estate? Since that is one of the requirements,
I think the single interest in real estate means it's all in one.
Yeah. So in that case, what does that mean when you have, because we have properties in Livingston with a primary dwelling unit that's straddling a lot line, and then you either have the ADU on one side of that lot line or the other side, if you have, let's say, a primary dwelling unit on two lots, and then you have the ADU either in between those lots or on one side or the other. Is that going to cause a problem, or how do you navigate that?
I think it's a great opportunity. I think you should buy it. I think you should buy it. And then you should change the lot line. That's what I think. I mean, that's
For somebody who's not going to go for a common boundary relocation.
I think it's a great opportunity to have a listing like that.
But what advice would you give them in order to get them sort of in the direction that they want to go? Okay, I guess common boundary relocation is one option, right? So that they have both the primary dwelling unit and the accessory dwelling unit on one lot. Other options from our panelists.
Honestly, as long as you're hitting the square footage definition, people are going to work with.
Is it the same?
So if it's.
I think we need to have Chris talk, because, for me as a lender, it's all gonna come down to Chris telling me what the highest and best use of that property is. And that's where I come in to say, like, if you have a primary on one lot and you have an ADU on another lot, but the entire thing is one property, one yard, you can tell that they were built together, one tax bill.
And so it's a little different if you're coming to that as an appraiser on a purchase versus a refinance, right?
Yeah.
So not in terms of the way the lender would choose to qualify it, but in terms of how we would look at it. But
Right.
if you're coming to it as a purchase, any realtor worth their salt would probably realize that these are now in your second definition separated, so they're on the 25 by 140s, but they're all distinctly separate lots. They're going to probably list those separately, right? You're not going to see them listed together. So that takes care of that problem pretty well in the purchase. If the house is straddling the lot line, then the current use, the highest and best use, is almost undoubtedly a single-family home with an ADU. And that's just the nature of it, because we look at what are things exactly, as is when we get there. We're not trying to imagine some future scenario where you can do something that requires government permission, engineering fees, all that sort of stuff. So I think
Your first example is pretty straightforward.
And as a lender, there are times that I am trying to consider it a primary residence with an ADU, just because the interest rate is so much better on a primary residence than if I have to consider that a 2-unit property.
Yeah.
The down payment, the loan options are just a lot better on a primary with an ADU compared to a 2-unit primary residence.
Good segue, Becky. So I wanted to ask a question that we talked about a little bit, that you touched on in the presentation. This was another one that came from one of our folks who registered today, which is just what options exist if you're not leveraging home equity? And then I'd love to talk here a little bit more about your perspective on the risks and opportunities associated with homeowners leveraging their home equity.
Okay. So if you were wanting to construct an ADU on a property that you own without using your equity, private financing, a personal loan where they're not taking collateral. Every institution has a personal loan option, but it varies and it's usually not a lot that they will leverage for you. I also know that there are almost every single credit card company has a personal loan option now. American Express, Discover, all these different ones have options to use to just get a personal loan. It is an installment loan it's usually a variable interest rate, but it is an installment loan, so you are making payments to principal and interest. That's the private financing. Those would be ways of not using equity in the home.
And we talked about, I think included in your response, but I just want to highlight, like gifts from grandma.
Yeah.
Or maybe your employer has a program where they,
Correct.
Yeah.
Some employees do have programs to help people with assisting with additional housing. So.
Great.
What's the second question?
Second part was just what risks or opportunities are associated with homeowners leveraging their home equity? Great.
What's the second question?
Second part was just what risks or opportunities are associated with homeowners leveraging their home equity? Yeah, do you want?
Yeah, risks. You want risks.
Risks or opportunities?
I mean, the opportunity is pretty much when I'm looking at people's assets, that's their number one asset is their equity in their home. So leveraging that to build more equity, I think is a good thing. And you can do that with the cash out refinance, refinancing the whole mortgage, and your current mortgage plus extra money that you want out, or a home equity line of credit or a home equity loan. So you have a first and a second mortgage on that.
We also addressed this question pretty early.
Good. Yeah.
Because you have to set a budget at some point, right? So you'll go to the banker and you'll have a lot of equity, and you might have way more than you need to build an ADU, right? The question is, you're going to take equity and you're going to pull it out, and the goal is to hopefully create an income stream for yourself or a place for someone in your family to live.
Correct.
If it's someone who's living in your family, the question is how does the family support that payment? And that's pretty early conversation. Typically it's through like a fixed income portion of the family is covering part of it, and maybe the younger generation is covering the other part of it, and then we get to a number that says this is kind of where you can go, and then we'll say, okay, what can we kind of get for that, right? The other way we look at it is you're going to pull this money out, and you're going to try to generate a set of income, and then I use some of your numbers to talk to them about what can you expect to see for that, and does that make financial sense for you to take that risk, and what if it goes unrented for 7 months? And it almost always starts with I'm going to do the short-term rental conversation, then we say, okay, let's talk about what the winter looks like, and then you're not going to get that, and then let's break that down, and then you have to clean it all the time. How's that going to work for you? And then it almost ends up being kind of a wash for a lot of people between the pain and suffering to just go long-term. It's like, okay, so now you know what you're going to get out of it, and they're going to give you money associated, so let's go that way. And that ends up getting the number. Unfortunately, for some people, it starts to feel like a lot to take on. And it's like, okay, now I've got to deal with this long-term rental. Well, you're right, what if I didn't rent it for 6 months and I still got to make this inflated payment? But there are so many people in this town, especially kind of one generation in front of us, that have almost no mortgage and almost no income. So it's a kind of a good opportunity for them to end up with income out of their no mortgage or close to it.
And Wyatt, I'm really glad that you brought up the point about a rental potentially being vacant a certain period of the year, because that's built into some of these loan policies that are available through the FHA and Freddie Mac, for example. They'll only give you like 75%?
75%
Yeah.
of the potential rental income,
Yeah, I think that's intended to account for that. So,
And I'd like to add that we've
We've
got
had a lot of success with business financing, where people will they'll set up an LLC and then get a business loan to do an ADU as well. We've had that in multiple situations. Most of the time, most of them have been amortized over 10 years. We have had one person that was able to amortize it out to 20 years, and then it's renewed
every 5, I believe that.
So they're getting commercial financing.
Yeah, they're getting commercial financing for these, and we've got several institutions that have done that here locally, with commercially financed for the homes.
Pretty similar to just doing a personal guaranteed loan.
Yep.
Right, you're basically just doing PG, that's fine.
I think we're gonna start seeing a lot more subsidizing, and a lot more investors joining partnerships, the funds in these projects and get more affordable for each
So we have 5 minutes left before 12:30, and I hope we tried really hard to answer some of the questions that you submitted in the presentation and also just now, but I wanted to invite you all in attendance today to ask any other questions that have come up during the course of this presentation or that you came here hoping to get answered. Yes, Pete?
So if you wanted to do multiple ADUs, say, more than one tiny home, does that kick you out of the, FHA stuff and you have to go conventional?
So Pete's question was, what are the options if you want to have more than one accessory dwelling unit?
It becomes a multi-unit property, and then I think if you want to go a conventional, FHA no, but if you want to go a conventional route, then I'm, on the residential side, we're stuck with, can the appraiser find comparable properties?
You're saying,
Multiple
I
ADUs.
understand, like one main house on a single lot with 2 or more
Yes.
ADUs?
Oh, yeah, I can't do
Yeah,
that.
that
It's a multi-unit property then.
Let me give you just a slightly different take on how to think about that. You've got in the city of Livingston, they base it on the square footage of your lot size, not by lots. So let's say you have 7,000 square foot, which is 2 lots, right? You're technically allowed to have 2 primary units and 2 ADUs on that property. So the way I would approach it, if you really wanted to go that route and you wanted to really densify things, that would be how I would think about it. There's also some regulations in the works right now around duplexes in R2 that also change it a little bit. That's going to kick you into more of a commercial financing. But if you thought about it like 2 projects, one of them would probably be commercial, one of them maybe personal. Again, not a banker. That's how I would think about that scenario, is if you're actually building a primary and an ADU, if you wanted to do 3.
Yeah.
It still matters in Livingston, because again, most of the lots are 25 by 140 on the infill part. It still matters if your main house straddles that first lot, say you only have 2, then you really can't separate that house from the other 2, right?
Well, the city's very open to doing a boundary line adjustment to create 2 lots that don't transact that primary in the front. And so you transact it against the back of that lot, right? And then you'd have a separate address and a separate meter system to create the period. So you really would be creating new units with new lots that are sellable. Whether you choose to retain ownership of all that or not is completely up to you.
But if you're in a situation where you have one single large property that you're not planning on subdividing, and you want to have one primary dwelling unit and a couple accessory dwelling
It
units.
becomes a 3-unit
And it
property.
becomes a 3-unit property.
And it's still a residential loan. You can do up to 4 units residential before you go into the commercial side of it. And you can do as long as the purpose is for commercial financing a business, you can do commercial financing on any of these things. I think the biggest thing that you need to think about is, you need to be, part of this today is to make sure that the community understands that we need to be thinking about everyone here, the financing side of it, how, if you're gonna sell it eventually, or even down the road, what that potentially looks like, the city, the zoning, your builder. So, for me, if you were to do that, it would come down to what my appraiser thought the highest and best use of that property looks like. Was there boundaries done? Should this be, and how I send it in too, as your lender can, if I send it in as a 1 unit with 2 ADUs, that won't fly, right? It'll become a 3-unit property. If I send it in as a 1 unit with an ADU and then a whole nother separate appraisal order for just a single family residence on 2 different legals, it's probably going to be appraised that way.
All right. Well, we are actually out of time already. That hour flew by. But please give a hand for our wonderful and if you have extra time, we've got food in the back. You can grab a lunch and take it to go, or you can stay and chat with us a little more. You're also welcome to reach out to me. My email address is on the screen, as well as Becky's, if you have ADU questions. And before we adjourn, I just want to thank all of our financial supporters. They are so wonderful, and the pool is ever growing. And yeah, thank you all for joining us today. All right, go grab some lunch.